Hi, in today's video we will take a look at order blocks. Order blocks are also part of our strategy. We use them as key levels where we monitor order flow. Therefore, we will cover them in today's video. What is an order block? An order block is a zone on the chart that represents previous accumulation or distribution. In these areas, large market participants like banks, institutions, etc. have filled their significant large positions and then moved the price sharply. Order blocks are very important because they reveal where strong buying or selling interest has previously existed, often creating high probability zones for future price reaction. That's why we use them as key levels for our potential order flow setups. When we know that a large position was built at a certain price level and the market then moved several percent, we can expect that the price will likely react to this level again if it returns. And the return to these order blocks is exactly what we monitor. If we see strong buying or selling activity there through order flow, we open positions, and we want to be active there. There are basically two types of order blocks, bullish and bearish. Let's start with the bearish order block first. The zone of bearish order block encompasses the entire body of bullish candle that precedes the aggressive sell-off. So, when you see a sharp price drop that leaves behind an imbalance, also known as a fair value gap, look for the last bullish candle before this drop. The edges of this bullish candle, forms the bearish order block, which will likely act as a level where the price may react again in the future. Once the price leaves behind a fair value gap, it shows that the move had real strength and the accumulation with that order block was truly significant. This increases the likelihood that the order block will be respected in the future. So, for strong bearish order block, look for an aggressive sell-off with a fair value gap. The last bullish candle is exactly what we call order block, bearish order block, and this is exactly what we use as our key level for potential order flow setups. Once the price returns to that level, we want to focus on short positions because we expect a bounce downward. However, we only open the short once it's confirmed through order flow. Without order flow confirmation, we're just patient with paper hands. So that was a bearish order block, and now let's take a look at bullish order block. The principle of a bullish order block is actually very similar. A proper bullish order block is the last bearish candle before aggressive price rally. And ideally, this rally should include fair value gap. This zone serves as a strong support where we expect a bounce upward. So once the price returns to this zone, we monitor order flow again and wait for a bullish setup. The logic of a bullish order block is exactly the same as that of bearish order block. Large players accumulated significant large long positions and then pushed price upward. Once the price returns to these levels where accumulation caused the price rally, we expect a strong reaction. Therefore, we want to use these levels, these zones, as our potential key levels. The best timeframes for order blocks are 1 hour, 4 hour, and daily. Order blocks from these timeframes tend to be more respected. Lower timeframes such as 5 minute, 15 minute, or 30 minute are used for entries. I'm currently looking at 4 hour timeframe. The 111,000 level will be very important in the future because this is where accumulation took place, which then leads to a bullish price rally. We can see several bearish candles here that were followed by a strong move upward, creating fair value gap behind. So this is a clean and strong example of a bullish order block. Here we can see a clear example of a bearish order block. Around the 107,000 price level, a bullish candle formed, which was immediately followed by aggressive move downward, once again leaving behind a fair value gap. In this example, we can also see how the price reacted when it returned into that bearish order block. A perfect reversal to the downside. This would have been great short setup. I hope this helped you get a clear understanding of what an order block is and how to use it correctly. If you like to continue learning, check out our website, where we offer a complete crypto order flow course, including free PDF materials. You will find modules covering volume, price action, and order flow from A to Z. I'll leave you a link in the description of this video. Thank you so much for watching.